the BRICS nations will do is just peg their currency to the dollar price of gold. And they're the ones accumulating all of the gold and producing it all. And so if the United States inflates, the dollar goes down, the price of gold goes up, the BRICS win. If the United States tries to catch up and buy more gold, the dollar goes down, gold goes up, BRICS win. And his idea is just to peg it to the dollar value of gold. If that happens, they win without doing anything. Whatever it is, I do believe that the Tier 1 revision, the central bank accumulation off the charts, it is going to have some form of a peg or some significance to a new system.
In 2024, BRICS, spearheaded by China, is intensifying efforts to move away from the US dollar and explore alternative currencies. The entire bloc is focused on de-dollarization, with initiatives such as the development of BRICS and local currencies, and expansion contributing to this strategic shift. Notably, China has taken a prominent role in championing the de-dollarization agenda, particularly in early 2024. AndySchectman, president and CEO of Miles Franklin, expresses concern over the sustained efforts towards de-dollarization, signaling potential implications for the global economic landscape. Consistent with the theme that defined the BRICS alliance's trajectory in the previous year, Russia has underscored that abandoning the US dollar is a top priority for 2024. This commitment was articulated during a recent gathering of BRICS Sherpas and Sous Sherpas held on Monday. The meeting brought together representatives from all BRICS nations, including the 5 newly expanded countries: Saudi Arabia, the United Arab Emirates, Iran, Egypt, and Ethiopia. Significantly, this gathering marked the first time the expanded countries joined the original alliance members. Schectman highlights a provocative move by the United Arab Emirates as it openly declares its decision not to trade in dollars. This stance is emphasized through a significant cross-border transaction between BRICS members, the UAE and China. The transaction, settled on Monday, utilized the new digital dirham, effectively sidelining the use of the US dollar. The UAE Central Bank initiated this groundbreaking digital dirham payment, amounting to 500 million dirhams, equivalent to $136 million, with Sheikh Mansour directly conducting the historic transaction to China. AndySchectman points out China's strategic acquisition of the London Metals Exchange as part of its broader goal to control global commodities. China aims to register warehouses in the country to store metals traded on the LME, a move aligned with its vision since Hong Kong Exchanges and Clearing bought the LME in 2012 for $2.2 billion. Before diving into AndySchectman's interview, subscribe to our channel and give this video a big thumbs up.
I use sophisticated not in terms of the way we always expect it to mean. I use it in terms of sophisticated in terms of macro events. Or let's just say, people who understand where we are. And there have been some inordinately large deals that we've done, but the volume is way off and it's eerie, it's quiet. And when you look at what's happening on the wholesale level, when you look at what's happening in Shanghai on the LBMA and COMEX, the ETFs, all bleeding off product, it makes me wonder, how many people really understand what's coming at them. And I have this narrative that I continue to talk about that I see accelerating faster and faster and faster. Let's talk about a few of them, add it to what we talk about week after week after week. And again, look, I don't know. I don't want to say I'm sorry to anybody, but I am sorry for being repetitive. I am and I'm not. I'm sorry for being repetitive and following a chain of events that I've married my ideology to, because I do believe it is the most important thing. And although there are external factors that we should talk about, and I try and touch on them, most of the periphery is noise to me. It's the big picture that matters. And the de-dollarization that we continue to see, to me, is very alarming. We talked about how the United Arab Emirates made the provocative move of saying they're not going to trade in dollars. When that materializes, I'm not quite sure. And we talked about how they are the 7th largest producer of oil in the world, and they are an OPEC member that was just admitted to BRICS here January 1st. They just yesterday, the day before, completed the first ever digital transaction made directly to China through the mBridge platform. We've talked about the mBridge platform for over a year. And that mBridge platform, think of it as a bridge that allows central bank digital currencies to trade with one another outside of the SWIFT system. Now, do you think there's any coincidence to countries wanting to be able to transact with one another outside the SWIFT system? I don't. This is how all of the countries are sanctioned. When the West imposes sanctions, they are locked out of the SWIFT system, which is the oxygen, if you will, to be able to transmit money from entity to entity. And these countries are hell-bent on finding a way to transact their own currencies, their local currencies, outside of the SWIFT system. This is the first ever transaction made directly to China from the United Arab Emirates, who just said they're not going to take dollars anymore, who was just visited by Putin right after they made that announcement, who hasn't left the country but twice in 2 years because of the sanctions. You can see things in every corner, if you look closely enough, are accelerating. And I think that this Bridge platform is something we'll hear more and more and more about as a way for the BRICS to end reliance on the dollar through digital methods. We saw a very interesting article. How many people know that that Hong Kong or that China bought the LME, the London Metals Exchange, a few years ago? Now, they kept that quiet. A lot of people don't know that. But now we're talking about warehouses in China that are going to be holding industrial metals. Now, the article didn't talk a lot about precious metals. I'm sure that's next. But when you talk about metals traded on the LME, this has been a very strategic aim of Hong Kong and of China to control all of the world's commodities. I believe that this is something they have done methodically, and they are working on. And all of the relationships they're working on, like with the United Arab Emirates, center around trading in local currencies, ultimately maybe in a BRICS currency, but has to do with commodities. They bought the London Metals Exchange, and now they're going to be warehousing metals that are trading on the LME in China. Little by little by little by little, logarithmic decay, the infrastructure is being put into place.
AndySchectman emphasizes the importance of the Tier 1 revision and the off-the-charts accumulation of gold by central banks. This accumulation is a precursor to some form of peg or significance in a new global financial system. The analysts of WGC noted that the People's Bank of China led central banks in gold purchases last year, buying 225 tons in 2023. The National Bank of Poland was the second largest gold buyer last year, purchasing 130 tons and increasing its gold holdings by 57%. Discussing James Rickards' perspective, Schectman notes the possibility of BRICS nations pegging their currencies to the dollar value of gold. This strategy, seen as advantageous in times of U.S. inflation, doesn't imply the end of the U.S. dollar. As gold is traded in U.S. dollars, a BRICS currency pegged to gold would remain directly related to the dollar. Rickards suggests that in such a scenario, a rise in gold prices to $3,000 per ounce from $1,900 would represent a 28% gain against the U.S. dollar. Let's get back to the interview.
Now you have the Speaker of the House and the Biden administration, along with the European Union, talking about not just freezing and sanctioning, but to confiscate, to use, to pay for the war because of congressional appropriations drying up. And so all of these things, everything you just laid out so beautifully and articulately, these are all, and that's what I see. I put them all together, and in and of themselves, they have significance. Put them together, and they have tremendous significance. And this is the rallying cry. The only way that I see this working is if they come back and peg some form of a currency to something stable. Now, I wanted to mention one other thing because I had lunch with someone who I respect a lot, Mark Moss, and we talked a lot about my ideas, and he more or less he agreed with everything I said. His one takeaway, he's someone who believes a little bit more in Bitcoin than he does in precious metals, but believes everything I said up until the point where I say they will take gold, which is a tier 1 asset, and peg it to a distributed ledger for the world to see. And the immutability of it and the veracity of it. And I said that's the way it'll work. He says, well, a distributed ledger, if it's not decentralized, is just a ledger, is something that can be altered and changed. And it's the decentralization that keeps that from happening. And I agree with that. I mean, the urge to change and manipulate would be strong. First of all, I don't think any decentralized currency will ever exist in this current system. It's certainly not as a government backed, because how can you do something decentralized and still maintain control? You can't. So if indeed the central planners stay in control, my idea would have been what I think they will do is use blockchain to show the veracity of what's pegged to it and have it independently audited. I don't know another way to do it without making it convertible. And as Gresham's law says, bad money chases out the good. I just don't see that happening. There's not enough gold. Prices would have to go too high. But using blockchain, using gold at a much higher level, pegging a percentage to it, I think is what they plan on doing. Now, one other thing I'd like to say, you got James Rickards, who has another take to it. And his take is that what the BRICS nations will do is just peg their currency to the dollar price of gold. And they're the ones accumulating all of the gold and producing it all. And so if the United States inflates, the dollar goes down, the price of gold goes up, the BRICS win. If the United States tries to catch up and buy more gold, the dollar goes down, gold goes up, BRICS win. And his idea is just to peg it to the dollar value of gold. And if that happens, they win without doing anything. Whatever it is, I do believe that the Tier 1 revision, the central bank accumulation off the charts, is going to have some form of a peg or some significance to a new system. And that's why I talk about people doing this, the importance of it, because a lot of people say we had no warning. How did this happen? And if you aren't seeing this, it's I can't believe it. I mean, it's all around us. So I will continue down this road, and I think something will show itself by or before October of this year.
Goldman Sachs predicts that the BRICS alliance, comprising the original member nations and their expanding influence, is set to dominate global GDP by 2050. The anticipated ascent in GDP emphasizes the substantial economic power and influence that the BRICS nations are expected to wield over the coming decades, solidifying their position on the global stage. What potential implications and challenges might arise in the evolving landscape of the world economy? And how could this shift impact geopolitical dynamics? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.